Let's talk about worst case returns. People generally tune into the stock market news when the market has taken a big dump. Does anyone recall that last fall, between September and December, the US stock market fell 20%? Does anybody recall that at all? One person. Two? Two people? Two people remember that. Everybody else does not, because you've got your real jobs. And also, our memories are fleeting. By March, the market had recovered all the losses of the previous quarter. This is a chart from January 1st, 2000 to December 31st, 2009. So not this decade, the past decade. We call this the decade of suck. This little green line here shows money invested into the stock market over time. And the blue line is a benchmark of stocks and bonds, and the red mark is a typical ETF portfolio, very similar to what you'll have in your Vanguard portfolios. At the end of a decade, the difference between the green line and the red line is about $100,000. That's how much money you would have made on $1 million over that whole decade. That's awful. Why would you ever do that again? Well, because decade by decade returns are variable. So this is the same chart, but now extended from the end of 2009 all the way to the present. The same $1 million is worth almost $3 million. So one of the most wonderful things that you guys have right now is the benefit of time. I don't see anybody here older than 40. You've got 20 or 30 years to let your retirement savings grow, and you'll have some good years and some bad years, but triple every 20 years, double every 10 years, that's kind of expected. So again, it's very easy to get frightened out of the market because of a 20% pullback, because you saw something on CNBC or read something in Forbes, but actually, you don't have to do that. This is how investors win at investing. This is a chart that runs all the way back to the stock market crash of 29. And obviously that was bad. The market fell 83%. The second worst market crash was in 2009. So in our lifetimes, the market fell 50%. But even so, from here to where we are now, the market is 4 times higher. I know a lot of people that jumped out of the stock market right about here and never came back in again. Those people can't retire. For every year that you have negative returns or a negative stretch, you have 9 years of positive returns. So imagine going to a casino and it was red and black, but there were 9 reds and 1 black. You'd play that game all day long. You wouldn't put all your money in, but you'd put in enough to keep getting those nice, powerful returns.